Have you thought about how the new tax law will affect your investments? Today I'm breaking down the new tax law changes for 2026 regarding tax brackets and capital gains tax and how they affect your investments. I'm Dakota Grady, DG the Money Coach, and I'm all about helping you to master your finances. Let's dive into the conversation. How many of y'all have investments that you feel like you're paying too much in taxes? Drop it in the chat. One thing I believe and feel like people don't talk about a lot is capital gains tax on investments. Well, today we're discussing just that. If you are struggling with your finances, drop in the chat below mistakes, and I'll send you a resource that can help you to stop making mistakes with your finances. The new tax law that came out recently for 2026 will affect you when you file taxes in 2027. What you need to know today is you have 0, 15, 20% for your capital gain. Let's break down what that means. Say you have a brokerage account. Every year you tax on the growth of your portfolio, right? So if you have held investments for less than a year, you're basically taxed at ordinary income, which is your regular tax rate. But if you have long-term capital gains, meaning you have held these investments for longer than a year, you'll be taxed at 0, 15, and 20%. And that's based on your taxable income. For example, the new tax law changes. The tax brackets include single, married filing jointly, married filing separately, and head of household. You got 0, 15, 20%, right, for each of those categories. So we're going to break down just a couple of them. Namely, if you're single or if you're married filing joint. We'll talk about those two categories just to keep it simple, and I'll give you some context when it comes to this. So say you put some money to your brokerage account for 2025, and it grows. When you take that money out, so you held it for 5 years, what you do is you pay capital gains on that. So say you're single for 2026, 0%, if you have made up to $49,450, you will pay no capital gains tax on that, right? Because the threshold is 0 to $49,450. But if you make more than that, you'll go from 0% tax bracket to 15% tax bracket when it comes to capital gains. So it'll be $49,451 through $45,500. So that's a big gap. But if you're within that second tax bracket of 15%, you'll basically pay capital gains tax of 15%. It's that simple. Now, if you have a larger income and you're single and you're making more than $45,500, you pay 20% capital gains tax. So you have to understand that. So as your income increases, then you'll pay more capital gains. Now, even if you reinvest those particular gains, say you have dividends, right? Instead of cashing them out, you'll reinvest them to buy more shares, you're still paying tax on that. So you want to be mindful of your income level when you are investing. And again, that's something that I feel that people don't talk about often. They tell you to invest money in a brokerage account. They tell you to go invest in stocks, but they're not telling you to be aware of the tax implications of investing. If you're married filing jointly, and you're in 0% tax bracket, and you're making between, the tax bracket is 0 to $98,900, which is basically half of the single rate, right? So basically, if you make less than $100,000, you won't pay any capital gains tax on your investments. However, once you move up to $98,901 to $613,700, you'll move up into the 15% tax bracket. So when you have any gains in your portfolio, you'll be taxed at that 15% tax rate. Now, if you're making more than $613,700, you'll move up to the 20% capital gains. Again, the more income you make, the more you tax on your income. Now, this is a side note. If you have a big income, one way to reduce your taxable income is to start a business. Why? Because the IRS allows you to deduct expenses that associate with your business. If they're ordinary and necessary for your business, you can deduct it within reason. If you don't have a business or you don't want to start a side hustle, think about it. Just think about considering starting one so you can reduce your taxable income. If you don't want to start a business, that's fine. So continue to pay the capital gains, but I would recommend also meeting with your tax professional every year, or maybe twice a year, mid-year and at the end of the year. Mid-year, so you want to review your withholdings, make sure you're in line with what you're supposed to be withholding for the year, based on last year's withholding, but they're also not paying too much tax. And if you need to make adjustments, do it mid-year instead of waiting till the end of the year, because at that point, nothing can be done really. And if you don't make changes until the next year, the prior year taxes have been finalized. I mean, the year's done. You can't make any changes. All you can do is amend your tax return, but the year's done. You can't make any adjustments to be proactive. These are the new tax law changes for 2026. You'll be taking effect. So when you file your taxes in 2027, this is what will happen. You'll be paying capital gains taxes on the money, whether 0, 15, or 20% of your investment. So I hope this episode was helpful to you all. Please like, share, comment, and subscribe to the channel. Keep watching the next video to get more information about finances to change your life. And I'll see you there.